Don't panic. It almost never makes sense to sell right into the maw of a big freakout like this one. The only time it made sense to sell into a panic was during the financial crisis, when everything was being crushed. But as I said at the top of the show, this is not another financial crisis. Instead of selling everything, you need to ask yourself, well, what's not impacted? What's going down that doesn't deserve to go down? Because those stocks will be worth buying into weakness, if you have fresh cash, that is. First, though, once again, because I'm not pretending to be bullish, let's go over the negatives. We have to presume that the coronavirus outbreak will not be contained. Too many people left Wuhan, this epicenter, before the quarantine. It's pretty clear the disease spreads rapidly from person to person. Because it's so frightening, the sell-off is going to hurt. Do you really want to go out to eat knowing that the table next to you might have someone who's been exposed to the virus? They can still be contagious, even if they're not showing any symptoms. You certainly won't want to fly to or from China. And some people won't want to fly anywhere at all. Travel is worrisome. However, we flagged all of these for you last week when there was still a good chance to get out. They're getting hit just as we predicted. We can keep hitting them here, but we've made our points known. So let's now make another set of points. That leaves plenty of stocks that you can safely own. Why don't we just build a portfolio of companies that either have a lot less exposure to the coronavirus outbreak or could actually benefit from it? You know, I know we're not supposed to try to benefit off of something terrible, but you often ask me in Twitter, Jim, what can I do? Okay, so we're going to give you a list because we like to answer on Twitter what people want. First, there's AbbVie. We know the Chinese government they're using a combination of two AbbVie drugs to help treat the disease. They've got a great antiviral portfolio at AbbVie. I don't know if they're going to work. They aren't preventative either. But they did work for some people in China during SARS, so there's some hope. AbbVie stock has been slammed lately because investors are worried that the company could have a shortfall in reports in a week and a half. Given that the company's about to close on its acquisition of Allergan, I don't even think the quarter matters that much. The important thing is that AbbVie can take Allergan's main drug, Botox, and push it overseas. Allergan currently has an international presence, but AbbVie will be able to really expand that footprint. It's a much better distributor, larger, of drugs. Allergan recently came up with a pill, by the way, that can alleviate migraine pain for most people within 2 hours. As a spokesperson for the American Migraine Foundation, I can tell you from personal experience that this could be a huge blockbuster. Migraines can be blinding, agonizing, debilitating. And there's never been a decent pill that actually makes the pain go away, and it's not the Excedrin migraine. It doesn't work like that. I think the estimates for this drug are way too low, which is why we want to buy more AbbVie from my charitable trust, which you can follow along by joining ActionAlertsPlus.com club. Meanwhile, the company's paying a 5.6% dividend. That's not bad. The stock rallied today, but knowing this market, well, it's going to be down tomorrow. Do you not buy? Here's what I want you to do. If it's up, don't buy it. There's so many opportunities. The stock was up really big at one point today, and people bought it. I didn't want that. Next is Clorox. Well, here's another nice, reliable company that sells, well, let's say, the only cleaning product that kills everything. I believe people will stockpile their wipes. I am. That's right. Knowing that even without any coronavirus cure in sight, these things could be a lifesaver because the main way to prevent transmission is by not touching things that other people have touched. Whenever there's an epidemic, Clorox's stock tends to be a winner. It went up 10% during the H1N1 outbreak 2009. Of course, some of their divisions aren't doing that well, chiefly bags and charcoal, but there's a new version of the bags coming out shortly, and Kingsford's season is too far away to matter. Stock yields 2.7%. Hey, that's not bad with the 10-year of 1.6. Third stock that's worth buying in a weakness, McCormick, the spice kingpin. Okay, McCormick, the spice kingpin, I like to call it that. They report tomorrow. They make Old Bay. They make a bunch of things. They bought French's mustard, by the way. I saw that for $1.97 a bottle. Walmart. A whole wall of them. It was incredible. It was a wall of value. Anyway, they report tomorrow. I know it's quite a couple of downgrades, as people are always squeamish about this one. Yet the darn thing is only a couple of bucks from its highs, almost like someone anticipated the epidemic and gobbled up some of it ahead of time. McCormick's the ultimate stay-at-home stock. If you're too afraid to go out to eat, and people will be for a couple of days, believe me, you'll need to cook. And if you cook, you need seasonings. Let's see what they say tomorrow. Fourth coronavirus stock, 3 years ago, a little company called Owens & Minor bought the single best play on infectious diseases, a company called Halyard. And that had been underperforming ever since it was spun off by Kimberly-Clark. For $710 million, Owens & Minor got a premier franchise in hospital gowns and hospital masks. However, this stock is not for the squeamish. It's fallen 82% in the last 5 years. It has more than $1.6 billion in debt. That was a mistake. It's desperately trying to sell certain properties to raise cash. That said, historically, it's been a good investment during a heavy flu season. And so I think it works here, as long as you recognize it is a spec, people. Fifth, Moderna. Okay, it seemed like it was shooting from the hip last week when it told us it was working on something for the coronavirus. But wait a second. We spent some time with these guys at the J.P. Morgan Healthcare Conference, and I can tell you, they're anything but hype artists. Moderna is a biotech company with a revolutionary concept of developing a whole new category of drugs based on messenger RNA. That's the agent in your body that takes the blueprints from your DNA and makes them into reality. You change the messenger RNA. Well, you can basically reprogram your cells. Using this platform, Moderna is working on 21 drugs to treat a host of different ailments. Remember they talked about being on Amazon Web Services, inputting things? Well, they're doing a lot of infectious disease work, like for the coronavirus and others like that. They have major government contracts to develop global health vaccines, including one with DARPA, okay, which invests in new technologies for the Defense Department. They're also working with Merck on more commercial vaccines. Given its platform and its backers, I think Moderna is still the company that's most likely to come up with something for this coronavirus outbreak in a very short period of time. Now, maybe just a few months. All right, that can feel like forever, I know, but it's pretty short time versus the speed of the outbreak. I wouldn't normally recommend a biotech stock as speculation or something like this. Odds are nobody's going to come up with a cure. But Moderna has so much going for it that I actually think it's worth buying here. 6, how about Thermo Fisher? Okay, that's the old Thermo Scientific. Now, they also bought this great division from GE. Now, if you read The Lancet, one of the world's oldest medical journals, and by the way, I think the single best source on the pandemic, I can't believe I'm checking this all day, but I do. They repeatedly point out that Thermo Fisher's gene sequencing technology is the key to figuring out how to treat the disease. The stock's been a tremendous performer, but it could be even better. I know that in cell programs, everything goes down. Think about this one more. Bristol Myers. All right, this is a company with some great franchises, including the anti-cancer drugs that just picked up when they bought Celgene, which then, of course, correlate with their own. It reports February 8th, and I bet they'll lay out some synergy targets for the Celgene deal. Their infectious disease portfolio is strong, and it's one more reason to buy the stock, plus the 2.8% yield doesn't hurt. The bottom line, with the exception of Owens and Minor, these are all conservative situations. But then again, I'm recommending them because they'll work regardless of whether or not we can contain the coronavirus outbreak in a short period of time. You need that kind of peace of mind if you're going to try to buy anything into what I think could be a multi-day sell-off. Let's go to Kevin in Massachusetts. Kevin.
Hi, Jim. Booyah!
Booyah, Kevin. What's up?
So anyways, I've been out of the market for a while. I'm looking to get back in. I was looking at FedEx. What do you think the price on FedEx? And also, what can I start my portfolio with?
All right, well, FedEx is something I talked about with my colleague David Faber this morning. I said there have to be activists eventually. This thing has just gotten way too cheap. He said, Jim, what's your catalyst if there is no activist? I do not have a catalyst away from not having activists because especially China trade, thank heavens we're not at economic war again with China. China trade's going to slow again, and FedEx needs it to accelerate. All right, guys, listen up. This sell-off will hurt. All right, we haven't had one in a long time. But there's still plenty of stocks you can own whether we contain the coronavirus outbreak or not. Much more Mad Money ahead. Fossil fuels have gone out of style on the Wall Street fashion show big time, with the coronavirus causing yet another step down. But is that drop warranted? I'm going off the charts to find out. Then, how is panic playing a role in this market's moves? I'm offering my take after today's drop. And all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.